Hi everyone and welcome to today's morning report charts appraisals on Tuesday the 14th of November with me, Richard Perry, market analyst at Hantec Markets. We've got an interesting look to the markets. There is a degree of dollar strength that we're seeing across the Forex markets today. However, there is euro strength as well. You can see that with euro dollar, which is now sort of 35-40 pips higher and above 117 figure again, which is interesting. But generally across the majors you're seeing dollar strength pretty much across the board. And that's as we're seeing treasury yields which have pulled higher. The 10-year back above 2.4%, which is interesting. You're also seeing that 2-year continues to soar really strongly there. That euro strength is sort of dragging on dollar index. Obviously the euro is a massive component of the dollar index, but certainly it would suggest that weakness on dollar index is still a chance to buy. But yeah, that euro strength that we're seeing has come on the back of this number here, I believe, which is German GDP flash, which has come in ahead of expectations. So that's sort of helped the market today for the euro. But yeah, generally speaking, we're seeing a bit of stability on equity markets, although drifting back slightly. We saw DAX was around about sort of 40 ticks higher at one stage, just drifting back to 20 odd now. FTSE is mildly higher. I mean, CAC's mildly higher. I mean, the US markets are interesting as well because last couple of sessions, or 3 sessions actually, we've seen markets sort of selling off initially and then bouncing into the close, and we've seen that on the S&P 500 primarily, but also the Dow as well. And that is sort of helping to stabilise these markets, I think, a little bit today. Although, is that move sustainable? Not sure yet. Now, this is an interesting one: euro dollar versus the spread of the Bund under Treasuries. There has been a break of that downtrend, and that's sort of helping, I think, to pull that euro dollar higher. Interesting that we're seeing the correlation back positive again between dollar yen and the 10-year Treasury yield. But yeah, some interesting moves on the markets nonetheless. Now, we've also got a lot of data today in the fact that we've got UK inflation at 9.30. It's expected to go over 3.0% on the headline, which would mean a letter needing to be written by Mark Carney to the Chancellor Philip Hammond. We've also got core inflation expected to pick up, and also focus, I think, on the PPI input prices, because that is sort of gives a gauge of how sterling weakness is sort of reflected in the inflation data going forward. Now, expected to see a tick up on core and headline, and that will be the important data points there. Now, into the afternoon, with oh, sorry, no, you've actually also got German ZEW and also the Eurozone flash GDP as well. So does that German data mean that we might get a slight upwards positive surprise on Eurozone flash GDP? Possibly. And into the afternoon, we're also looking at PPI for the States, which is expected to come in at 2.3% on the core. Now, we've also got a panel discussion between the top central bankers of the world. We've got Carney, we've got Draghi, we've got Kuroda and Yellen all speaking at the ECB today in Frankfurt. They're going to be talking about central bank communication, and not expected to make too much of an impact on the markets, but it's also always worth watching out for some sort of comments that might move things, so keep an eye on that. Now, my chart today is the dollar CAD. Now, this is an interesting chart, and I love it when we see technicals coming back into play. Look at this uptrend that we've seen over the past 2 months. It's been building through September, October, and now we've seen a retreat back to that uptrend, and then a positive candle yesterday, a positive candle today. Is seemingly back in play. Now look at this. We're back. We've found support at the old breakouts as well. That was a bit of a pivot there from August, but between that breakout high of 25.85 up towards 26.60, so about sort of 80 ticks of support there. What was yesterday, the low last week, 26.60, where we saw the bounce, and the market now beginning to form new positive candles, breaking that little mini downtrend. We're also seeing the RSI pulling back higher from 50 again. We're seeing the MACD lines and the stochastics beginning to turn higher. This is turning back into a more positive outlook again. It looks much more like the market is turning a corner. We're seeing the momentum indicators on the hourly chart more positively configured. Moving averages starting to turn up. This is looking to be a market that gets bought into intraday weakness, and you look for a test of the 2820 resistance overhead there from last week's high, but then subsequently these key highs from late October, early November, 29.15 seem to come in time and time again. About 3 sessions there we hit that level and fell away. So that is a key level, but also watch out for that 144-day moving average as well, which provided the basis of resistance. But certainly looking much more like the market is beginning to turn around again, looking more dollar strength. That's in line with the readings on these a lot of these other charts that we're looking out for as well. So interesting moves on that. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.